How much life insurance should you carry? Life insurance coverage may depend on your financial goals and needs. Death, just like taxes, is inevitable, though most people may not be keen to dwell on it. But ensuring that you have the right financial resources in place, including life insurance, is important if you have loved ones who depend on your income. Life insurance can help cover funeral and burial expenses, pay off lingering debts, and make managing day-to-day living expenses less burdensome for those you leave behind. If you don't have life insurance, or you do but are unsure about whether your policy is sufficient, here's how to evaluate your coverage needs. Life insurance is an agreement in which an insurance company agrees to pay a specified amount after the death of an insured party, as long as the premiums are paid and up to date. This amount is called a death benefit. Policies give insured people the assurance that their loved one will have peace of mind and financial protection after their death. Life insurance falls into two different categories, whole and term. Whole life policies are a type of permanent life insurance, meaning you are covered for life as long as your premiums are paid. Some whole life policies offer an investment component that allows you to build cash value, taking the premiums you pay and investing them into the market. Term life insurance, on the other hand, covers you for a set term. For instance, you may purchase a 20 or 30-year policy depending on your age and how long you need coverage. Some policies allow you to renew your coverage after a certain expiration date, while others require a medical exam to do so. Between term life and whole life insurance, term life tends to offer cheaper premiums. A medical exam is a standard underwriting requirement for most life insurance policies, although you may be able to purchase no exam life insurance at a higher premium cost. Who need life insurance? Life insurance can be a helpful financial tool to have, but buying a policy doesn't make sense for everyone. If you are single and have no dependents with enough money to cover your debts, as well as the expenses related to death, your funeral, estate, attorney fees, and other expenses, then you may not need life insurance. The same applies if you have dependents as well as enough assets to provide for them after your death. But if you are the primary provider for your dependents or have a significant amount of debt that outweighs your asset, then insurance can help ensure your loved ones are well taken care of if something happens to you. Having a life insurance policy could also make sense if you own a business or owe consignment debt, such as private student loan, for which someone else could be held responsible if you pass away. Keep in mind that life insurance by itself doesn't cover every situation. For example, a standard life insurance policy won't pay any disability benefits if you become disabled, nor will it cover long-term nursing care costs. But you can purchase disability riders or long-term care insurance riders for an additional premium cost that can cover those type of scenarios. If you are married, then both you and your spouse may need life insurance coverage, even if only one of you is primarily responsible for your household income. Age and life insurance. One of the biggest myths that life insurance agents perpetuate is that you have missed the boat if you fail to sign up for a policy when you were young. The industry leads us to believe that life insurance policies are harder to get the older you become. Insurance companies make money by betting on how long people will live. It's true that insurance is cheaper when you are young, but that doesn't mean qualifying for a policy is easier. The simple fact is that the insurance companies want higher premiums to cover the odds and older people, but it is very rare that an insurance company will refuse to cover someone who is willing to pay the premiums for their risk category. That said, get insurance if and when you need it. Do not get insurance because you are scared of not qualifying later in life. Should you use life insurance as an investment? It's possible to consider life insurance to be an investment if you have a policy that builds cash value. Cash value policies are generally touted as another way to save or invest money for retirement. These policies help you build up a pool of capital that gains interest. Thank you.